The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 30th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go take a look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. No matter where you are in the world, whether it be your car, your boat, maybe you're camping in the mountains, wherever it might be, we want to hear from you, whether it's by phone, by email, steve@tfnn.com, and, of course, inside the Tiger's Den. Always look forward to those instant messages. So, in fact, a day like today, guess what? We are going to need callers. We're going to need, Spaceship as well. We're going to need folks to tell me what you'd like to look at, because we have one of those, another basically low-volume trading session, just trading inside range. We'll take a look at what the message of the market is right now, but I'd sure like to just simply focus on what you want me to take a look at for you. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading off 51 points at 18,452. S&P is down 4, trading at 2175. NASDAQ Composite off 12 points, trading at 52 and a quarter. Russell 2000 is in the green, up 70 cents. Nonetheless, it's up. The DAX closed up 113 points. Gold is back $10. That's the first thing we'll take a look at for RJP in the den, because the question from RJP is tell us where you would buy gold and silver with your money. He's looking specifically for a price point on the December futures contract. So we'll take a look at that. Silver's off 19 cents. Leading the charge here to the upside, dollar-wise, you've got Agrium, AGU, up 6%, $5.40. Ritchie Brothers Auctioneers up 18%, $5 and change. You got United Continental Holdings up $4, that's up 8%. Tech Data having a good day, that's up 5%, nearly $4. Hershey is down $12, down 11%. AutoZone is off 1%, about $8.50. Ulta Salon Cosmetics off $8. That's down $3. Chipotle off 8 as well. So let's get to that first question, though, and then I'll go focus on, unless I get other questions, I'll go focus on, hey, where are the markets going and why? What are they doing out here? I'll pose that question to you. Where do you think the markets are going, though? I'll pose another question for you to think about while I go ahead and do gold. And is especially as I'm doing gold, is inflation good or bad for gold and silver, the metals? Inflation, is it good or bad for gold or silver? And then secondly, how about inflation? Does inflation have an impact on the stock market? So think about that, and then you and I will try to come back and see what history tells us about that. But think about that. And the question, then the third question would be, hey, are we in a deflationary or an inflationary environment? And, of course, we have to rely upon not what you and I see when we go to the grocery store or the gas pump or things of that sort. We've got to rely upon, because I can't put that stuff into my charting system, not as easily as I can, the Bureau of Labor Statistics data, which many people will argue that, it's not accurate. But at least we've got inconsistent, accurate data to go ahead and take a look at to help answer that question for us. So that's what we're going to do. But back to gold out here. If we take a look at it, trade at 13.17 right now. Yesterday we talked about this. We talked about this little candle right here. That was a July 25th candle. The low on that was 13.1930. We're at 13.1740 as we 13.1740 as we speak right now. Now that is a hammer candle. Now, the beauty about a hammer candle is, as you know, first it's an area where the market is always trying to find a bottom out here. In fact, that's what it did on July 25th. Had a little bit of follow through 2 days later, really. Market moved higher, at least moved back up to its highs, the swing point out here. Now, it closed below a hammer candle. Again, that price point today being 13.1930. If you close below a hammer candle, the saying, the expression that we like to use is if you're long, you're wrong, just because it's a nice nice poem out here, a nice rhyme. Real poem. What the heck am I talking about? Now, when you close, what does that actually mean? You know, whenever we're targeting upside potential or downside potential, we're always looking at swing points. Of course, you and I, we focus on candlesticks, and there was one heck of a bullish engulfing candle that formed out here, that breakout session on June 24th. So a swing point, big, huge bullish engulfing candle. That really, RJP, has got to become one of the price targets to be taking a look at. That is $1,259 out there. Now, if we take a look at the patterns inside gold here, let's do a couple of things as well. Let's throw a couple different tools. Let's take a look at our TAS market profiles. So TAS market profiles show we're below the daily. We've been below the daily for days now. We know that the last time that there was a test of that area, it was rejected. That was back on August 26th. So if you close below that hammer candle, that says, hey, price is going to go test 12.95. So we were looking at what? That was about 12.90, 12.58. I take that back. 12.58. So 12.95 is going to be the next stop in gold, assuming that it closes below the low of the hammer candle. So now that's just simply using TAS market profiles. What we also know with regard to gold, this is really a short-term little short-term pattern that we're taking a look at, but we can see a declining tops line, or I can see it. We're not looking at channel line, just simply utilizing the swing point or the candlestick high, I should say. So the extreme emotion. So we saw a declining tops line. That form, the one that I'm looking at, began on July 11th. I'm using that as my touch point. Then the high of August 2nd. We can see a couple of different touches out there. So that looks like a pretty good trend line. We can also see a rising bottoms trend line that had formed out here. And on the trading session here just a few days ago, August 24th, is when we saw that price level broken with conviction. So what does that little wedgie do for you and I? What's it do for us, RJP? What it does is it gives us another price projection tool. That price projection tool says, go take a look at the base. Now, the base I'm referring to is right here. I've got a little yellow box, rectangle, really, if you're watching us on TigerTV. And so I'm using the base of that little wedge and saying that, okay, that gives us also a price projection equal to or greater than. So we've got another tool out here, and all we have to do is just put that back at the bottom of the base, and then just simply draw a horizontal line straight across. So that says, and that takes us to RJP. That takes us to 1259.90. That takes us right back, in essence, to the bottom of this, which was 1259.10. That takes us right back to the bottom of that bullish engulfing candle, which should act as support. So that becomes the next target. Now, what you didn't say is my thoughts are, it really depends on when we get down there, because I can still anticipate Goldilocks headed lower through October. Last time I checked, it was only August 30th. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, we're going to, we always like to take a look at both sides of the trade out here. It's incumbent upon you and I to do that. So I'm going to finish off gold here for RJP by taking a look at the longer-term charts out here. And I'm going to use the weekly. And the reason I'm using the weekly, we can see a couple of different trend lines out here, or levels of support and resistance. And I see that our man Z had posted a comment into Den. Here's what he was referring to. I don't see a chart attached to it, which was the downtrend line. That's the red diagonal line. Here, let me do this here. Makes it easier for you. Whoops, I didn't want to do that. That's not what I wanted to do. I wanted to do this. I do not want to edit that line. That could create conniptions for me. We don't want conniptions. There we go. Okay. So now we just see the red downtrend line out here, and that's really what he's referring to as it being intact, and that prices run into resistance of this downtrend line. Now we're taking a look at the continuous contract out here. So we know that that is an important level of resistance that gold needs to be able to get above. What we can also see, though, remember I was using a very short-term trend line to show the break of that little wedgie pattern out here. But if we take a look at a longer term, which we should, rising price channel, gold is really pulling back into that area, now. It's got a few more bucks to head to get down to the bottom of that rising price channel. But RJP and everybody else, I believe that if gold is able to break this rising price channel out there, you and I will not be the first to see this occur. And that could be where we see a piling on to the downside. So if this breaks, then that October-ish time frame that I'm looking for is more likely than not. If it doesn't break, we could be seeing a level of support sooner than later out here. And then what I had really brought up on this chart was the horizontal trading range boundary lines. This is the weekly level. The dark solid lines are the real ranges. The little dash line out there, that happens to be nothing more than the midpoint areas. I can turn those on and off as soon as I can find the gosh darn button. That didn't work either. That's pretty wild. Why is that? Why? What the heck? Midpoint lines. There we go. That should turn it off. There we go. So now it's just a little bit easier for you to see. And these are great horizontal levels of support and resistance out here. Now we can see here in the case of gold, we had some diagonal resistance. We had horizontal resistance that you wouldn't have known if you hadn't been taking a look at the horizontal trading range tool out here in that 1366 level. So significant resistance. Now the beauty of that is if we do see gold break above that, that gives you a price target of 1471. So to the downside, remember we were looking at the 1260 area, utilizing a couple of different tools. This also shows that at 1262, that should be another significant level of support out here. And that's just simply using our horizontal trading ranges. There's the midpoint. You can see we're kind of sitting at it right now. So in the case of gold, RJP, anybody else out there, that is what I would be looking at. Now, a number of emails that have come in. So thank you very much. That means that what I want to do first, though, is give you a feel for what the markets are doing with the Dow being off 58 points. So here's what we know. We know that the NQ, I know, you now know it, the NQ on a 30-minute basis was pushing lower, doing less relative energy. It is trying to form a bottom. We got a nice little bullish reversal signal, the bullish engulfing candle that formed out here at 1230. I didn't have any follow through. You hate when you see a reversal candle form to not have follow through out here, and it didn't. Doesn't mean it's not trying to form a bottom, because it is, but it just doesn't have any kind of oomph to the upside out here. And its oscillator unchanged line, that's the red diagonal line, not red squiggly line out here, acted as resistance. So if in fact the markets are going to find a bottom, the first thing that you will see is you will see the NQ close about 47.7686. Not to be exact, that number is going to change, but just put 47.77 at this stage. You'd see a close above that. That would then say price moves up to the 47.88 level. And it's on the 30-minute basis. On the NQ is the only the equity futures contracts. Let me just make sure. It's the only of the equity futures contracts that is providing us with that signal of the market trying to form a bottom out here. The Dow, the Russell 2000 is not doing that. Now, we go from there over to the summation index, and interestingly enough, most of the morning, the NASDAQ composite, that's the center chart. Well, it's not the center. It was chart number 2. That's this one now that we've exploded it. The oscillator reading, you can see it's reading right now is minus 164 if you look in the box on the left-hand side out here. Most of the morning, it's been above zero, even with the market moving, somewhat slightly lower out here. That says that the market breadth has actually been strong enough to get that advanced decline oscillator above zero. So we'll watch out. So it was not suggesting to us that the move lower was real out here. When I say real, that it was anything really to kind of worry about. In fact, it said, this market, we could continue to see it trade sideways, move higher, so on and so forth, but not anything to truly worry about. So we'll see where that ends at the end of the day. And then to complement that, let's go see where the VIX index is trading. Still, I do say still below the 50-day exponential moving average out here. If we take a look at that, that's the yellow line. Here's the little box you can pay attention to out here. That's got the 50-day exponential moving average at 1341. Right now, the VIX is trading at 1314. That is a message of plenty of liquidity. So is this market going to start careening to the downside? At this stage here, with the tools that you and I look at, say absolutely, positively not. That doesn't mean that we don't close low today or lower, but there was no energy yesterday to the upside. Let's not believe that there's any energy to the downside out here, because there most certainly is not. Okay, so that takes care of what the market is doing, why it's doing it, and why I would and then you got the Russell 2000 and the XLF trading slightly higher today. Now, I promise you that when the market does decide to move lower in earnest, you won't see those two moving to the north side. They'll actually be the leaders to the downside. And that's just simply not the case out there. So the market's giving you and I some really good information, really great signals out here that it actually wants to move higher. Now, we're going to, before we answer that question about inflation, right, is inflation good for gold or bad for gold? Is inflation good for the markets or bad for the markets out here? First, we want to go ahead and take a look at some of these email requests. So Ken wants us to go take a look at Triple D out here, 3D Systems. So we're going to do that. And I don't know if Ken is long, short, just looking to get in. So I'll just do an analysis. Here's a daily chart. Here's what we know about 3D systems. And I'm not even sure on the daily why these lines are out here per se. Well, I know why a couple of these lines are out here, but we're not going to focus on those right now. We're just going to focus on what it's doing at the moment. And with regard to 3D systems, I'm going to take that out of here. With regard to 3D systems, there is a swing point out here from July 14th. That had 3.1 million shares. That was passed with 5 million shares. That says, Ken, there is an A to B equals CD pattern that is underway at a minimum inside of 3D systems. Now, it's at least completed a couple of those A to B equals CD patterns. It's made it to the 1 to 1.272, but there is no bearish reversal signal. So 3D systems on the lightning bolt pattern says it wants to move to the next level. That next level is going to be 1777. You can ring the one-arm bandit because you got 777 up there. Sounds like a good deal to me. Now let's go take a look at market profiles. Let's go see what maybe that provides to us out here with regard to information. Hey, how about just slightly above 1777, Ken? You've got an 18.25 mark. So what does 3D Systems need to do? It's got to clear 1643. If it clears 1643, onward and upward, 1777 to 18.25. And that was for Ken, I believe, in Wyoming. This is Steve Rhodes with TFNN. We'll be right back. We're going to go take a look at, looks like the IBB, the USG, the Qs, and the QID, and anything else that you'd like.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Bill would like to know, hey, hello, Steve. Is the IBB making an ABC move to the 100-day simple moving average? Thanks, Bill. Bill, I would say that I do not see the A to B equals CD pattern that you are looking at. But what I do see is we certainly see up at these highs out here, the 299.49-ish area, we can see the last time we had a nice big old reversal signal with volume, by the way. It doesn't matter whether it was influenced by EpiPens or not, which it likely was back on August 24th. But big volume to the downside, 3.7 million shares. There's your reversal signal, big old three-river morning star out here, or evening star is really what I should say. So is price likely headed to the 100-day simple moving average of 274.77? Sure, I don't see any reason why it shouldn't. The 0.382 retracement level is at 276.88, so we're not going to be exact. We're going to use the range out there. So yes, and let's go just pop on our market profile, see what they say out here. And they say that in order for that to happen, Bill, you need to see a close below 281.73. That is the weekly bottom of its box out here. Should be significant support. But if we see a close below 287.65, pretty darn good chance you're going to see that 275 to 276 range tested. That is on the IBB. Thanks so much for sending in that request. For Michael, we're going to be taking a look at USG. So USG out here, let's go see what that is. That's just USG Corp. So let's take a look at it. While I'm pulling that up, I'm also just punching something into my other chart in case something else pops up there that we need to pay attention to. And if we take a look at USG, one of the things that we can see, yesterday's candle, let me get rid of the 100-day moving average out here because that's not what was asked about. Okay, so now when we take a look at this, yesterday is an interesting session. So Michael I'm in with calls. Okay, so you're looking for this to go higher. Now, here's what happened yesterday. Let me give you the bullish case and the bearish case. So the bearish case says that we tested a swing point from the yesterday, from the trading session of July 20th that had volume of 2.6 million shares. We tested it with volume. That says we ought to be back. Now, the high of that swing was 30.84. Yesterday's high was 30.80. You actually closed inside the swing, but this morning it's giving it up. And you've got, in essence, your second bearish reversal candle. Now, yesterday's candle, because of the gap, this is where it always gets, it's a little bit of a nuance out here. Which is more important, the gap up? Because, you see, let me do this here. Let me turn off the horizontal lines because it's going to be a little bit easier, Michael, for you to see what I'm looking at, I think. If we just take a look at yesterday's candle session, right, it was a shooting star, right? The opposite of that hammer candle. And shooting stars either work or they don't. Well, guess what? They're working. It's working today. And price is at least coming back, it looks like to me, to at least test this area where it broke out. So you want to watch 28.68. I'd suggest that you watch 28.68. Does that level hold that support? Because it was also a gap up. So you got a bullish and a bearish signal occurring on the same day. The gap up, if we just simply take a look at the close from the prior session and fill that in, it would not qualify as a shooting star candle out there. So, you have a nice little breakout here, but, why is this doing what it's doing out here? Other levels to really pay attention to also failed, in essence, at its TAS weekly profile high out here. So pulling back to the 28.39, pulling back. If it gets in 28.16, you can bet your sweet bippy that 27.24 is likely becomes a price target for USG. So you didn't tell me what month or anything out here, but that, at least on the daily chart, is what I would be focused on and taking a look at. Now, for James, he wanted to take a look at the QQQ series ETF. Let's see. It just says QQQ and QID, if you don't mind, Steve. So my guess is that he is short the Qs out here, but I think the QID is the short version. Is it not? Is it QID is? Let me see here. Let's punch it up on our screen here first. Give me a second. QID. I think that's the 200%. The ultra short? Yeah, so that is the ultra short for the Qs out here. So the question becomes, Let's look at, you want to take a look at both out here. What should we be looking at? So this is really going to trade off of what's going on inside the Qs out here. Here's what you've got going inside the QID. Right now today, it's run into a bit of resistance at the top of its daily box out here. If we're just simply going to use our box as profiles, market profiles as levels of support and resistance. So it's run into resistance. 25.48 is the top. You've hit 25.52. You're trading at 25.45. Volume today, 787,000 shares out here, running into resistance of this gap to the downside with volume that had 2.7 million shares. So we're nowhere near that volume. So at this stage here, you've got a sideways type move. I don't know if you are in this or not in this. If you're not in this, your best chance, if you want to try to get in, is buy it at the bottom of the box, $24.99, and then watch the volume as it comes back to try to tag the bottom of the box at August 23rd level at 25.02 is the price point to be watching. I'd like to see it do it with less than 1.4 million shares. That's if we were just looking at the QID. If we go over to the QQQ series, where we've got some better information, it's still showing something very similar, right? The Qs are pulling back into that breakout from August the 5th. It had 23 million shares to the upside, and today you're at 9 million shares. So it's going to be light on volume. We're just really trading sideways out here. It's testing the bottom of its daily market profile. If it wants to move lower, 116.13 to the level of 115.78 becomes the number to pay attention to. What you don't want to see this do out here is to see this close above 118.03. 118.01 happens to be if you're short. 118.01 happens to be the TAS weekly profile, and 118.03 happens to be the oscillator unchanged line. That is not shown on this chart here, but it is shown just off the screen, and that's the numbers that you would be looking at. So that was for James. I think that takes care of at least all the ones that came in during that breakout here. Other than somebody trying to sell me the red copper frying pan. Now, how the heck did I even get those emails? And it's not just one email. It's like spam out of your, you know what. Don't ever remember searching for the red copper pan out here, but I have no idea whether it's any good or not, and I don't need a frying pan. Okay, so that takes care of it. But send me some more emails because we got 20 minutes left in the show. Now I want to go answer the question. I want you to answer the question. Really, it's not up to me to answer the question. I just posed the question out here for something to consider. Is inflation good or bad for the stock market? And is there a correlation that you and I can rely upon? Well, here is the chart. In a sideways market, you just kind of look for, well, and actually from a longer-term standpoint, I'm always looking for longer-term, what are the signals out here? What are the things for us to just really focus on and pay attention to? Now, the upper portion of my chart, all of this from the Bureau of Labor Statistics, is the inflation rate going back. I think their data goes back to at least 1990, maybe it was before. But here, what you've seen is I've just taken out the sections that are most pertinent to us right now, going back to 1997. So the upper portion of my chart, you're going to see some channel lines of inflation. You're going to see some moves to the downside out here. You're going to see right now we might be in a rising price channel of inflation out here. And in the past, has that been good for the stock market or bad? And if it's good, and we're in a rising inflationary time period, why is everybody looking for some type of major top out here? Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back, folks. So we're taking a look at the inflation rate chart here from the Bureau of Labor Statistics going back to 1997, and what we can see out here. There's a number of different, so there's, how do you interpret this data? And what I've done is the easiest way for me to look at it with any kind of consistency was to take a look at these different price channels that inflation has traveled within. Those are the rising blue trend lines out here. Now, the interesting thing as far as answering the question, are we in an inflationary time period or not, just using trend lines, I'll just go ahead and pull this down. I don't know the answer to that, but if we do take out the highs here from January, this is January 2016. That inflation rate out there will break through this trend line. We'll get back up to the top of that channel line, and we'll certainly know that we're in a. And it seems to me more likely than not. Does not seem like way to you that we may be headed towards an inflationary time period over the longer horizon. I mean, after all of the cash and everything else that's been put out there. It's got to come home to roost. And when it does come home to roost, it looks like, to me, it bodes well for the stock market out here. So don't get too hung up in the idea that the market is making some kind of major top out here. But we'll see. Maybe we're in a deflationary time period. That's what that descending trend line might be a suggestion to us. And if we break below that little rising price channel, we'll certainly take a look at that. Now, I threw that out there with regard to both the stock market as well as gold. So for all the gold bulls out there, do you believe, again, that we're in an inflationary time period? And if the answer is yes, and if we take a look at, now here's that descending price channel, okay? So just take a look at it slightly different. Take a look at when inflation here making higher highs, right? This is going from the time period of 2002, 2001, all the way to the highs out here in 2008, right? We've got inflation, making higher highs out here, and of course we know that gold went on to do the same. When the inflation rate kicked to the downside, we really had just kind of a sideways-ish type trading range out here. Where the heck did that come from? In any event, when we saw price break above that little box, we saw inflation move higher. We saw gold move higher. Obviously, the inflation rate had been moving lower. So, too, gold, right, until it formed this bottom back here in December of 2015, January of 2016, with that inflation rate kicking to the upside. So, again, this is so if you are a long-term gold bull, you believe that inflation is kicking in, and that's also going to go ahead and push gold metals to the upside. I would think that you might also be taking that same approach with regard to the stock market out here. I don't know if one is affecting the other, but it sure looks like it to me when I take a look at it. Okay, so we have some additional questions that have come in as well. We want to get to those during the next 15 minutes or so that we've got. I see the slight leg to the downside, Dow down 70 points at this stage here. But the questions that came in were, and you're welcome, Michael, okay? So that was just one for Michael with regard to taking a look at that equity for him. A question coming in, if we could take a look at natural gas, the UNG. So we most certainly can. On this other stock chart out here, give me a moment to pull up the natural gas contract. I might have to pull up the I'm going to have to pull up the continuous over here, but we're going to pull up the actual current contract for natural gas out here. And what we can see in this case is that right now, with regard to your UNG trade, and the reason why we're taking a look at the current contract out here is just simply because that is what it is trading off of. And we can see that nat gas right now today is trading above its TAS weekly profile high. Not by a ton, but by a little out here. No, wait, I don't have today's data. The contract rollover? Must be. So I don't even have the correct contract out here. Well, that's not going to help us. So is there an October contract out there? I know how to find out real quickly. Give me a moment here. Give me a moment to find out the current contract. NG, what do we got? Yeah, here's an October contract. So we've got, let me put that up on our screen out here, and that's going to make it a little bit easier for me to answer that question. All right, so let's put that up here. And what do we got? Okay, so now let's see if this thing will populate with our market profile, since that's what we were talking about. So it looks like we got a brand new daily that formed out here. Let me just hit my refresh button to make sure. And that forming today. So we can see here you got a little bearish reversal signal. Price stop now trading below the TAS weekly profile. So with regard to your UNG trade, I would expect and anticipate a little bit of pressure on that as natural gas pulls back to what could be or should be a level of support, which is going to be around the 274 level. At 274, that's the bottom of today's daily box out there, and also happens to be the point of control level on a longer-term chart, which is the weekly chart, so 275. So right in that range is what you should be looking for in the case of natural gas to pull back to. So let's go take a look at UNG as well, but the numbers are going to be different out here. There is a little rising trend line or descending trend line. Price broke above, but failed to get above its TAS weekly profile out here. This says 816 is the level where you would look for support. But I would rather be looking at the current contract, the October contract for nat gas, to make that decision for you. Let me see if I can do. Oh, I can't do that. Hold on. Give me a moment. I want to see if I can find a 30-minute chart out here. So give me a moment to do that. See if there's any patterns that show up worth. I did not mean to do that. Okay. Which was typing the wrong signal out here. So I'm just going to see if natural gas on a 30-minute chart out here. The problem is it's going to show the continuous out here. So this is interesting. So here I'm going to put the 30-minute chart out here. And you've got a little Tom DeMark setup that formed here. Just looks like in the last half hour. This was at the you got a little 9 count here at 1:30, so 15 minutes ago. So if natural gas is going to find any footing out here, it should do it post haste. Otherwise, you've got a nice continuation to the downside. I suspect that's what you might see out here. But nonetheless, on a 30-minute chart, if it were going to find at least a short-term bottom, right now would be the time. And where would price move up to? About 286 out there. That's that oscillator unchanged line. So, watch today's lows. If those get taken out, that suggests that you've got lower prices, and then UNG would also move lower out there. So I hope that helps answer the question with regard to UNG. Let's see, a quick update here on the phone, see if anybody else has sent in any requests. You're welcome, Jamie. We got that, and a couple more of these. Own a red copper pan. Who the heck got me on the red copper pan email list out there? Do you get those too? Does that not frustrate you? I wish there was a way to just totally get you. Have no idea. Maybe you do. Maybe you do have an idea just how much junk mail you and I get through. And that's why I always ask, hey, when you're sending me an email, make sure in that heading area, loud and clear. I mean, you're letting me know that it's you, it's a TFNN listener, it's something out here, it's a subscriber, because otherwise I don't have a lot of patience to spend much time on the emails that go into the junk box, or even those that get through the junk box that are pretty much junk anyways. Dow's off 64. S&P is down 6. Danny in Atlanta wants to go take a look at the yen, where silver is the buy in red copper pan. Hey, I don't know. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 65. S&P is down 6 points. So we've got about 4 minutes into the last segment here. And there was a question that came in. Danny in Atlanta wanting to take a look at the Japanese yen. So if we go to the yen futures out here, that way we're dealing with up to the moment date out here. What this shows, we see a nice little pullback out here and maybe into support. That is the blue bond. It just happens to be the colors on this chart here, a little slightly different than what we look at on my other charts here. Blue, in this case, happens to be the weekly profiles, and white happens to be the daily levels. And what we can see here is at 0.96905, not to be exact, but to be exact, that's the price level we're looking at. We're trading at 0.97075 out here. That should be a level of support. If that level fails, then price ought to head down to any one of these two areas. Let's go ahead and make it a colorful chart. Let's go ahead and add yellow. If we can find, there we go. We got the yellow line. Here's the first place, right? It is both a bullish engulfing candle, key reversal candle. The trading session is July 21st. That's at 0.9323, as well as the level here from June 24th. Now, why is Danny in Atlanta asking that question? I think I know. And thank you for asking the question. Because, earlier when we take a look at gold, we were looking at horizontal, trading ranges and descending trend lines and wedges out there. But my goodness, Steve-O-san didn't take a look at the Japanese yen. So if the yen is going to break below this weekly profile, and muy importante, so you guys got to send Danny a thank you note for even asking the question about the yen and where it's going. Because if it breaks through this level here, right, we see it close below a hammer candle, potentially on the daily charts for gold. And if the yen, because of the directional correlation between the yen and bonds, which mean, by the way, bonds should also begin to pull back. We haven't even looked at bonds out here. But, if we see a break of this area, 9.96905 yen futures out there, that's what you want to be watching. That's just simply going to add that fuel to the fire that we should anticipate, that 1260 type move that we were looking at inside of gold. We know there's some other support levels out here. But so thank you, Danny. And Mr. Bill says just the same out here. As to why we're looking at the yen. So that just helps kind of put that whole thing together and, to show you how things kind of do move synergistically out here. Don't you like that word? Here's the yen chart. This is a 10-minute chart. You see it kind of pulling back. You've seen, bonds doing the same kind of a thing out here. So we know that correlation exists. Here you can see the Japanese yen futures. Again, just a 10-minute chart out here. Bonds have really, from these highs out here, pulled back, just kind of trading sideways to higher out here. But so thanks, Danny. So, folks, if we just to summarize, hey, where are we at? No changes since really we came on the air. You still have this price relative strength divergent pattern that is in play. The NQ trying to form some type of a bottom out here. Welcome to the summer trading. And to anticipate anything different than what we're seeing out here, let's just take a look at our consolidation ranges. Let's just go ahead and narrow that back here. All that the NQ did was get down, in essence, test the bottom of that consolidation range. So expect this to continue for another couple of days out here. VIX index right now still below the 50-day exponential moving average. That is my call at 1:58 p.m. But, folks, stay tuned because we got other calls that are coming up. It is Terrific Tuesday. I think David is still on vacation. So we'll hear another great show, one of the recordings from this morning, I'm sure. Then Tom O'Brien from 3 to 5, Andy Heck from 5 to 6. Have a terrific Tuesday, and then join me again on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.